For so long, it's been ingrained in all of us that people with good or great credit scores get the best deals on loans. But you might have heard starting May 1st, there could be cases where people who have middle-of-the-road scores will actually pay less than people with stellar scores. The rumor is all over the internet, but it's not quite true. Hey there, I'm Ben Briscoe. Things are changing about how much a federally backed home loan will cost, and your credit score won't be as important as it used to. Let's dig into it and get you the full truth. Starting with the perspective of mortgage loan officer Al Bingham.
It's been a real big change. It's going to really hit the consumer hard when they go apply for a mortgage.
The changes are to the federal government's upfront fee to guarantee a home loan. Basically, the upfront fee to guarantee they will pay the bank off if you go into default. Late this afternoon, I talked with the federal organization making these changes, the Federal Housing Finance Agency. They said the updated fees are because of a new study about which loans are most likely to default. They found a high credit score did not always line up with a low risk of loan defaulting. Let's take a closer look at this to really explain it for you. You see, a person might have a near perfect credit score but own 5 houses. The FHFA says they are more likely to default than someone with a lower credit score who only owns 1 house that they live in all the time. They also now are considering if your loan is an adjustable rate loan, if this is a manufactured home, a multifamily unit, and how much your debt to income ratio is. If all of those factors and a few more are exactly the same between borrowers, credit scores will still make a difference.
Identical borrowers, right, applying for an identical product, all things being equal, will have the higher credit score borrower paying lower upfront fees.
The bottom line is that starting May 1st, credit scores will still be important, but not as important as they were before. This will not impact you if you already have a current loan on your house, just new loans. And the big question is, how much will your bill change under the new arrangement? I would love to answer that for you, but the truth is, it depends. You see, the federal government and mortgage brokers say there are a ton of factors that will now go into deciding the rate for your loan, and each case will be different. So it would be unfair and inaccurate to give an example of the change in price. The best thing you can do is talk with a mortgage broker before you start looking for a new home. They can give you a more accurate price of getting a loan.